So Cal-Maine Foods just put up some record-breaking numbers. You'd think the stock would soar, right? Well, it tanked. And that's the puzzle we're going to solve today. Let's dig in.
And this really is the million-dollar question, isn't it? How does a company announce its best Q1 ever, only to see its stock get absolutely hammered at the opening bell? Well, it all comes down to this huge disconnect, this massive difference between the story the company wanted to tell and the numbers the market actually saw. Okay, so here's our game plan. We're going to start with that headline miss, the thing that really scared the market. Then we'll get into the diversification story management is pushing. We'll look at the clash between those two, street versus strategy. We'll pull out the key debates from the Q&A, and then, we'll finish with the next call, what we think happens from here.
All right, let's kick things off with that headline miss. This is the raw data that hit the trading screens before anyone had their morning coffee, and the algorithms reacted instantly.
So take a look at these numbers. Now, on the surface, they don't look half bad. I mean, you've got solid year-over-year growth. But, and this is a huge but, Wall Street is all about expectations. You have to beat the consensus. And Cal-Maine, they missed on both revenue, what we call the top line, and on earnings per share, the bottom line. For the algorithms and the fast money traders, that is an instant sell signal, no questions asked.
But those numbers, they really only tell one side of the story. On their first ever earnings call, management came out swinging with a totally different picture, one of a big, fundamental business transformation.
And this quote from the CEO Sherman Miller really sums it all up. Now, what they really want you to hear is that Cal-Maine is not just a company that sells eggs anymore. Totally at the mercy of crazy price swings. They're trying to build something more stable, something that could earn a much higher valuation down the road.
And this chart right here, this is the proof in the pudding. See that 9.1% slice for prepared foods? A little while ago, that was basically zero. That's a huge deal. And it's not just that. Their higher margin specialty eggs now make up over 30% of their total net sales. So we're seeing a real meaningful shift in where their money is coming from, moving towards more predictable, more profitable products.
And if you want to see the engine behind all this, it's this number right here, an 839% increase year over year in their prepared foods business. I mean, that is just staggering growth. And it's all thanks to their recent acquisition of Echo Lake Foods. This is the heart of their new strategy. And they're not stopping there. They're really pressing their advantage. The Echo Lake deal already performing above plan. They're plowing another, almost $15 million into a new high-speed pancake line. The whole goal here is to grab a bigger piece of that value-added frozen breakfast market. It's a smart move. Okay, so this brings us to the main event, really, the big collision. You've got the street's knee-jerk reaction on one side and management's long-term vision on the other. And this clash is what made the stock go wild all day. So on one hand, you have the street, right? They see a commodity company miss its numbers. It's a simple, reflexive reaction, sell. But on the other hand, you have the management team in your ear laying out this detailed plan to become a stable, branded food company, the kind of company that the market loves and gives a much higher, more consistent valuation. And you can see this battle play out perfectly on the timeline of the trading day. Look at that. 9:30 a.m., the market opens and boom, the stock craters 7.5%. That's the headline miss talking. But then, at 10 a.m., the management call begins. And as they start telling their story, you see the stock claw its way back, closing down just a little over 1%. In the end, it looks like the story, the narrative, pretty much won the day.
All right, now let's get into the Q&A session from the call, because this is where you really learn what's on investors' minds. The questions from the analysts pointed directly to the big risks and opportunities that are going to drive this stock going forward.
So, what's everyone worried about? Well, it boils down to this really interesting tension. You've got a tight supply of eggs, which is great for pricing, but hanging over everything is this massive, unpredictable risk of avian influenza, or HPI. Management even called it a serious global threat. And that, right there, is the biggest wild card for this stock. Everything else, pricing, capital allocation, it's all secondary to that one major risk.
Okay, so let's put it all together. What does this mean for the stock? Let's get to our outlook and our official rating. This is the next call.
The bull case here is pretty straightforward. It's that the diversification strategy keeps working, consumer demand holds up, and their feed costs stay low. The bear case? Honestly, it pretty much comes down to one thing: a major outbreak of avian influenza. That could just devastate their supply and torpedo the whole story.
So here's what we think is going to happen. Next quarter, we expect to see more strength from that prepared foods business. But the headline numbers, they're going to be incredibly sensitive to any news about HPAI. Because of that, we think the stock is going to stay pretty volatile, probably trading in a range as the market tries to balance that long-term transformation story against the very real, very scary short-term risk.
So, with all that in mind, we're initiating coverage with a market perform rating. Look, we really like the strategic pivot they're making, the execution is there, but that near-term risk from avian influenza is just too big and too unpredictable for us to ignore. It's what's keeping us on the sidelines and preventing a more bullish call right now.
And that really leaves us with the ultimate question for this company. Can a breakfast food company actually transform itself into a diversified staples player? Or is it always going to be tied to the boom and bust of the egg cycle? That's the story we'll be watching very, very closely. This is not financial advice.